This video is for beginners who just started getting into trading and trying to understand the what and why and how. I'm very sure the first time when you open up a chart and you see a lot of things that you don't understand and you'll be like, what the hell am I seeing, right? And then you just got so overwhelmed and then you decided to be a next time thing. But lucky enough, if you're watching this, you will switch from a next time thing to, oh wow, I see it now. And you start digging into the world of trading. And so today we are going to understand candlestick patterns.
Alright, so how do we read our candlesticks? Basically, candlesticks, there's only two types. By default, the green one is actually bullish and the red one is bearish. But you can actually adjust the color on your own lah. But that's not the point here today. But basically, candlestick patterns is usually formed by a body and it sometimes comes with tails or wicks. Right, and the up here, the down here, these two things we call it as the wicks. Okay, and the middle part here is the body itself. On a bullish candlesticks, usually price is going up, right? So when price is going up, typically the open price would be at the bottom, which is here, we call it as the open price, right? And open price and the price went up and it closes here. Alright, and this is the closing price. So what it means when there's wicks on top and wicks at the bottom, essentially means that in this candlestick, the price actually opens at here, alright, and the highest point it reaches is here, and this is the lowest point that the price has reached within these candlesticks, and eventually it closes at this point, and this forms up a whole candlestick. And going to the other hand, on a bearish candlestick, so typically when bearish candlestick means that price is going down. Right, so when price is going down, which means the open price is at the top. Alright, price opened here, it went all the way down here, the lowest point it reaches is here, and this is the highest point where the price has reached before. Alright, and eventually it closed at bottom. And also regardless of the time frame of the chart, be it M5, M15, 1 hour, 4 hours, it's the same way of reading it. Open price, close price, where's the body, where's the tail, where's the highest price is when, lowest price it went, and where it closed. But what matters more in a candlestick is actually their buying and selling pressure. So let me show you an example here. And we have two types of candlesticks here. One with a super long tail on top, one with a super long tail at the bottom. So what this means, regardless of the time frame, as long as when a candlestick is being formed like this or like this, which means that there's rejection happening. So for example, if you take this, which means that at any point of time, price has reaches at the highest point here, but is being rejected all the way down and being closed, right? And which means that there's a lot of selling pressure on top, all right? And on the other hand, when you see that there's a long tail at the bottom, which means that price essentially reached all the way bottom here, but is being pushed back up, right? Which means that there's a lot of buying pressure here. And again, regardless of the color of the candlestick, as long as there's wick on the top, which means that sellers are coming in, and whereas there's wick at the bottom, which means that buyers are coming in. And what if the candlestick looks like this? All right, we have wick at the top, we have wicks at the bottom as well. It means that there is no decision, which means that sellers and buyers are balanced. Alright, so what you need to do is to wait for the next candlestick. However, do take note that these candlestick patterns, it has to be on your key levels. Only it can mean something, right? Do not just go into a chart and simply just look for these few candlesticks and just trade. You will lose like there's no tomorrow, alright? Remember, look at your key levels. Right, so for example, if you're at resistance level and you see a candlestick like this, right? You have a long wick up here. And essentially, you can expect that after this candlestick, you can see candlesticks are actually gradually moving down, right? Because it's at resistance level, and this means that sellers are coming into the market. And on the other hand, if you see that at a support level, you see a candlestick like this, which means that buyers are coming into the market, all right? And the next few candlesticks, you can expect that it's gradually moving up. And next, comparing these two candlesticks, just now we mentioned that candlestick you can look into buying or selling pressure, and next thing is to tell us about momentum. So comparing candle A and candle B. Which one is bigger? Clearly, this one is bigger, right? So which actually means that this candlestick holds more momentum, okay, comparing to this one. And it is also showing stronger bias when the momentum is bigger. So if we have 3 different candlesticks here, if we're gonna rank according to their strength, then it will be number 1, number 2, and number 3, right? And the reason is really simple. The first one has a bigger body, the second one medium size, the third one is small. So the bigger the body is, basically the stronger the momentum is. Okay, so now we have these 2 candlesticks without wicks, just the body itself. So the first one bullish, second one bearish. When there is no wicks or tail in a candlestick, which means that the momentum is very strong and the direction is very clear. Right? So for example, on this candle, open price is here, close price is here, there's no tail or wicks, which means that in this candlestick, the actual movement is actually straight up, right? Without any hesitation. On a bearish candle, same thing. Open price here, close price is here, there's no tail and wicks on the top or the bottom, which means that the movement of the candlesticks is actually straight down. And these 2 candlesticks is also saying that there's super strong buying and selling pressure in these 2 candlesticks, all right? And typically on this kind of candlesticks, we call it as engulfing candles, which is also one of the best confirmation that I like to look for. And just now we mentioned about momentum, we also talk about buying or selling pressure. And now let's look at this scenario. So let's just say that we have seen these 3 candlesticks approaching my support level, all right? And what we can tell is the momentum is decreasing. All right, we have a big candle, we have a medium-sized candle, we have a small candle, right? So which means that the selling pressure is decreasing when approaching my support level, all right? And that also means that we can start looking for entry to go for buy. And typically, when I see this kind of setup, the next thing I want to wait for is a strong bullish engulfing candle that's formed here, all right? When this happens, guys, just go for a buy. And same goes to when the price is approaching to your resistance level, we can tell that the candlesticks are decreasing in their size. This is the biggest one, the medium size, the small one, right? So momentum is gradually decreasing. So what I can wait for is an entry to go for sell. And again, same thing, if you see a bearish engulfing candlestick here, guys, let's just go for sell. So I mentioned earlier, candlestick pattern only matters when it's at your key levels. Right, 2 key levels that you can take as a reference. Number 1, support and resistance. Number 2 will be your trend lines. I'm going to share those that are simple and is very useful for you to immediately apply to your trading. Right, so number 1, we call it as a 3-line strike. So basically it looks like this. All right, you can see 3 red candlesticks, small one, and then 1 big green candlestick. Or the other hand, 3 small green candlesticks and then 1 big red candle engulfing. So what this means, when you see 3 drop, 1 up, you can go for a buy. When you see 3 up and 1 drop, just go for a sell. And number 2, my favorite candle, engulfing candle. So when you see that in the support resistance or in the trend line and it's being rejected and form the engulfing candle, guys, just go for that direction without hesitation. Bullish engulfing, go for buy. Bearish engulfing, go for sell. And number 3, morning star or evening star. So morning star, evening star typically means a reversal. So when you see these 3 candlestick forms, which means that price is actually shifting to another direction. When you see that on a support level, ready to go for a buy, and when you see that at resistance level, ready to go for a sell. Simple as that. Alright, so let's move on to the chart for some real life examples. And at this point, we can see a 3-line strike pattern here. 1 candle, 2 candle, 3 candle, and palm, 1 engulfing candle. Alright, so and are we at our support level? Yes, we are at our support level, right? So on support level, again, like I mentioned, candlestick patterns at key levels are more important. So on the support level, we see a 3-line strike, and what you do, we can go for a buy, and then eventually it did went up. So examples for engulfing candle. Right, so when we see the price is dropping, approaching to my support level, and we can also see that the momentum is actually dropping. All right, the candlesticks are getting smaller. And when we reach the support level and pump, 1 big bullish engulfing candle appeared here. So when we see that, immediately we can go for a buy here. All right, and just put the buy here, pump, and yes, take profit, hit. And on our trend line here, we can see there's a evening star happening here. All right, and we see evening star, and what we do, we go for a sell. After we see this, we drag stop loss, TP here. Yes, congratulations, that's another take profit. And we have our morning star chart pattern here. All right, so when we see a morning star chart pattern, let's just go for buy. Same thing, drag it to 1 to 1. Yes, congratulations, that's another TP hit. And lastly, candlestick pattern is not a strategy, but candlestick pattern can take it as a confirmation whenever you are trading. All right, so again, trading SOP has to be simple. You can take all the trading SOP that I had shared in the past and also adding on candlestick patterns as your confirmation.
And last, if you like my video, do like, share, and subscribe, and see you at the next video. There's a few links that in my profile that you can click on. There's my community, there's my partner broker, and so on. All right, see you soon.